Hello, this is Mike Swanson, WallStreetWindow.com. Got a very special guest with me today. I'm speaking with David Skarica, who runs the website addictedtoprofits.net. How you doing, Dave?
Hey, good, Mike. How you doing?
Oh, I'm doing great. It's been a while, actually, since we last talked. I think since February. And I actually got an email from somebody saying, "Where's Dave at?" So I'll just ask you, where you been? What you been up to?
Well, yeah, I haven't posted much. Well, there's numerous reasons for that. One of the main reasons is that I actually got a book deal to write. For those of you who know me for a while, I wrote a book called The Great Super Cycle back in 2011. I think it was 2010, 2011 it was published. And through the same group, a company called Newsmax, I got another book deal, and the deadline is for the end of May. So I kind of just been focusing on the book. And with the markets kind of being like dead, I was short pretty heavy, and then we got out of a lot of shorts in December, January because of the drop, and I was waiting for a rally, and then it was obvious this rally was going to get stronger and stronger, so I didn't really look to re-enter positions, which is then a good move. I just think there hasn't been much to talk about, and also, happily, some of the stocks I've actually recommended, like late last year, I was telling people to look at dips, and some of the deals that we got into have done very, very well. That's the funny thing, is that my portfolio has exploded to the upside. I have one cannabis deal that's done called TransCanna TCAN that's gone from $1 to $7, and a couple other mining deals that have done well. So it's just actually making money in some of my stocks, writing this new book. And as Mike can also tell you too, the newsletter industry isn't exactly the greatest right now. Everyone's into passive investing. So it's kind of I also do some venture capital and raise money for companies. It's like I can make better money doing all these things right now. So obviously I'm going to get aggressive with the newsletter at some point again. But most of my subscribers right now are just long-term subscribers that are almost on lifetime memberships. And I'm just really focusing on, them and some of these other ventures right now. And then hopefully we'll get back into it. But anyhow, with the markets, yeah, we hit a new all-time high. We're very overbought. So we probably should see some kind of pullback, and the market is pulling back today on some of those poor Google numbers. But, I would think that, I just don't know. Like there was a couple of strong internal things that happened in January that said the market could go up for 3-6 months, and here we are, 4 months later, and it's gone up a lot. And I'd say, but you're right at the point where either you're kind of like where you were in October 2007, in that you make a slightly newer high and the market rolls over, or if after some kind of consolidation correction here, there isn't a big pullback, you could see a move higher to, 3,300, and the S&P is kind of maybe a final kind of blow off. I think it would be a final blow off because the market would be so overvalued at that point. It's overvalued enough now, but I just don't know which of those two is going to happen. So I've really been more just long a couple of these stocks that have done well, with using my shorts just purely as hedges now, not being over aggressively short, trying to make a killing. And really, that's about it.
Yeah, a couple months ago, I came to the conclusion that really it would probably be difficult to try to trade the stock market averages using the SPY ETF or the short ETFs, and better to focus on individual stocks themselves for both short positions and for long positions. Because frankly, there's more money to be made anyway if you're in the right stocks that are going up than it is going long SPY. You mentioned this TCAN stock. It's gone completely crazy. But then on the flip side of that, when it comes to betting against stocks, we have seen, I believe, last week, a complete breakdown in Tesla. And if you want to bet against something, I think it's easier to bet against Tesla than the S&P 500. And I actually tried to short it on Friday. I couldn't get the shares, but I put on an options trade, one of those bear call spreads, just to try to make a little bit of money. It's not a big trade or anything, but that's kind of the extent of my trying to short right now, just a little thing here and there. But yeah, I'm more long than short myself, too. And
most of the shorts I have on, it's like they're in sectors I view as bubble sectors, like subprime auto lending or corporate bonds, that sort of thing. And then, because these are like macro themes, and the subprime auto lending is, I just own puts, but it's been a horrible short. Like a couple of these stocks that are in that arena have done very well. But again, those shorts are hedges, so it's not like a big deal. But anyhow, like that's kind of what I'm looking at here, is that, sectors that I'm bullish on is, like the gold and precious metals, or, we're getting late in the game for the cannabis stock, but I still think they might have one more run in them. So, and I am only doing venture capital in those. Like TCAN I did buy in the market, but that was because it had a very tight share structure. It only had about a $16 million market cap when it was at $1, right? So it was a cheap stock. It was not one of these stocks that was IPOing with a $500 million market cap. So most of them I'm doing pre-IPO, and then, hopefully when they go to IPO, they get that premium in valuation. So it's just like kind of being long these sort of things. And by the way, we're talking about cannabis being hot. Like the other stocks have done well. Like one stock that me and you both own and we did a private placement in was Wallbridge, which is was an 8-cent placement with a 10-cent warrant. And this stock is over 40 cents now. And they've had some excellent drill results. So, and for full disclosure, me and my family, we own a TCAN and we own some Wallbridge. So anyhow, these stocks, I've had a few stocks do really well, and I'm just kind of sitting there, and those have done well, and they've moved. Like we're talking about TCAN and Wallbridge, I don't know if I'd really buy them up at these levels, other than some kind of trade. They definitely the time with buy was a few months ago, but anyhow, you're just kind of like sitting on those, taking some profits and letting the rest run, and maybe putting on a few hedges here and there, and then buying some stocks. There's actually some gold miners that I really like that haven't moved yet, and I think there are more plays that will move when gold goes over 1350, 1400. So you could edge into those plays as well. So really that's kind of what I'm doing right now, and it's not very exciting. I know that, but I think there's a time, we both learned, you and I, like sometimes we've gotten too active. There is a time to have patience and do very little, and I think right now is one of those times, other than picking away at a few stocks you like, and maybe you could add to some hedges here and there. But like the one trade I still like is the LTD short, because I think there's no premium in those puts. I think that's where the real bubble in the market is, the investment-grade corporate bond market. But you could buy January 2021, not 2020s, but 2021 puts for zero premium right now, and you've got 20 months on the trade. So like something like that is something I look at as a hedge, but not much else right now.
Well, I think since we last talked actually in February, the biggest thing that has happened when it comes to the financial markets is the Federal Reserve. They had a meeting after that February interview in which they became completely dovish and completely abandoned the idea of raising rates again this year. And now the Fed Fund futures market is actually projecting about a 50% chance of a rate cut by October and over 70% chance of one by next year. So how do you think, if they do lower rates, that would impact the gold market and the stock market?
Well, I know a lot of people are actually saying that, they lower rates, it's not bullish, right? Because in 2007, they started lowering rates, in August of 2007, it was right near the top of the market. Now, it did cause a little rally for the next 3 months there. But it's really hard to know, because one thing I'm seeing right now, and let's see where the market acts now after these Google earnings. This is one company. All throughout earnings, the market had been acting well until today. And the buybacks are about to hit again. What happens if it's like, let's say the inflation numbers go low, you get a 10% correction in the markets, and they decide, okay, now is the time to cut rates. Well, maybe it could end up like 99 or 2000 when they cut rates in 98. That caused kind of the final bubble in the stock market. So maybe cutting rates, especially this close to the top of the equity markets, could actually lead to one final move higher. And at the very least, when they cut rates, and if you could go look at early 2001 or like I said, 2007, even if the markets have topped by then, you are probably going to get a good size rally for a few weeks or a few months. And that actually might be a good time to enter short positions if it does look like that's happening. But I would think that either way, and again, it's no coincidence that December of 2000 and that August 2007, right when they started those rate cut cycles, for roughly well, in December 2000, it was the bottom for gold and precious metals. And from August 2000 until about the summer of 2008, the gold and precious metals were about the best performing sector. And then they tanked with the rest of the market after that in 2008. But I would definitely think you're going to have a good 6 to 12 month rally in the gold and precious metal equities when they reverse course and start cutting rates. Like, to me, that would be a more sure bet than trying to short the markets.
Well, it's interesting with the gold market because gold has pulled back. It hit 1350 at the time of that Fed meeting, actually, when they shifted course, and has come down to about 1270. But many, of course, GDX has pulled back a little too, but many of these mining stocks, the smaller ones, haven't pulled back at all. For example, you mentioned Wallbridge, which most of us have a position in. I've got warrants in it currently, but that stock, it hasn't pulled back. But it's not the only one. But there are people out there now, because these stocks haven't pulled back, predicting a giant gold stock collapse. Then, but then on the flip side, it could mean that the gold stocks are saying that gold really isn't going to drop much more than it has. What do you think?
I don't know. It's just the thing about the whole gold trade is it's really difficult to sit there and like pound the table on it to people because gold's done nothing since 2011, right? And you're in, it's almost like you were in the late 90s. You've had this big boom in stock prices, and gold has really lagged. And then on the flip side, you don't really want to be calling crashes, I think. And we saw this, like, people who follow Martin Armstrong or whatever, we kept getting told by them the gold was going to crash to under 1,000. And of course, gold's had this rally back up it went back up over 1,300 and now it's trading around 1,300. So it's just like, to me, it's just kind of like, I think the downside is limited, and maybe the low 1,200s would kind of be it. And then at some point, you're going to break through this huge, and if you go look at it, forget the 2011 top, since gold bottomed in 2013, and essentially did bottom in 2013, you're in this huge 6-year base. And when you break out of that base, you have a 6-year market. Again, it's kind of like similar to 96, 97 to 01, 02, and you have this like 4 or 5-year base in gold. And when it broke 450, which was the 96 high roughly, it just went up like crazy, really until 2011 for years and years. So I do think once you break out of that base, gold is going to move higher. And I think that, again, the thing that to me gives it kind of a buffer or a basing aspect to it is just the Federal Reserve policy, the central bank policy, right? Where, okay, they are still letting the balance sheet shrink, but they're going to probably stop that in September anyhow. So really there's only a few more months of that. And then they're not going to raise rates. And if anything, they're going to do I think rate cuts are now being priced in by the end of the year. And this was without even a drop in the stock market. So I just think everything to me is for, this kind of buffer to happen in gold. Like, I think the only way that gold could have a significant move lower, say back to 1,100, would be if you did get some kind of big deflationary bust. If someone like Kyle Bass is right about China blowing up, well, China blowing up is going to kill base metals. It's going to kill a lot of these currencies that are linked to China, like the Canadian dollar, the Aussie dollar, are linked to commodities. And then, you could see a big spike in the U.S. dollar and gold have one move lower. But even then, if it's happening due to liquidity problems and financial problems worldwide, I think gold would actually hold up in that kind of scenario. If that was the case. So yeah, right now, again, it's kind of like, talking about being selling boring is I don't think gold's going to do that 1350 breakout anytime in the short term, but I think the downside is limited, and any downside you get, you probably want to be picking away at companies you like.
Well, that's basically what I'm doing. So, but that's buying on dips. That's buying on the companies that you think are the best, that's different than trading the ETFs. Like, I don't know how, honestly, someone could really make good money in JNUG and Dust at the moment. You just think they're going to get whiplashed when you can buy, a good mining stock, the right one, and do a lot better.
Well, the perfect example you're talking about with JNUG is, okay, it's back to where it was, last October, but it's also gone down from 11 to under 8 since, the beginning of the year. And like, for example, I like this little company called Delaney Gold, for example. And this is a little 5-cent company that is, it's in Africa. They're producing mines. I think it's really leveraged when gold goes over 1350 to 1400. And when that happened, actually, in 2016, Delaney went from 4 cents to 18 cents. And right now it's back down around 4.5, 5 cents. And I just rather pick away at something like that. And it just sat at 5 cents this whole move. Okay, so you didn't really move when gold moved, but it hasn't gone down. And if gold goes down to 1200, Delaney will probably still be 4.5 to 5 cents, right? Where JNUG will probably be at $5, right? And if gold goes to 1600, yeah, JNUG might go up 5 or 10x, but Delaney's going to go up 10x.
Yeah.
And I'd rather be in something like that, or 5 or 10x, and I'd rather be in something like that you can kind of just sit on and just pick away at than have to watch if you're trading JNUG, you got to watch that thing, every day, and probably multiple times a day,
Yeah, it's just kind of craziness. But, well, I'll let you go. We've been talking for almost 20 minutes, and I know you got other stuff to do. So thanks for taking the time to talk to me and everyone else. And unless you got anything else you want to add at the end.
No, like I said, I think right now it's like I said, it's kind of boring, but it's not right now. It's kind of time to look at your positions and adjust them. If you've been in the market, you had positions gone up a lot, you might want to take a little bit of money off. If you're in stuff, like maybe some of these gold and precious metal stocks that have come back or are basing, you could pick away at those. But really, that's about it. I'm not really doing anything drastic yet. I think the time for shorting will come again, but I don't know if it's going to be this summer or even it could be as far away as the end of this year or into next year sometime. So right now, I think that, you just kind of have to be patient. And let's face it, seasonally, I know that whole sell in May going away thing, but usually even if you do that, the big declines don't happen till mid to late summer to end of the year. So you have a few months here to position yourself, even if you do think there's going to be some kind of sell-off.
Right. It would basically mark the start of a topping process and not some instant crash, assuming that's the case.
Yeah. Well, actually, just the last thing on that, if you kind of look at the example that we just hit a new high, even if you looked at 07, 08, after the decline into January of 2008, the market had a rally into May of 2008. So yeah, exactly what you just said is even if we had some kind of correction, you'd probably get some kind of rally. And like I said, that would actually set it up for, you might not go down to the fourth quarter of this year or really next year almost.
Well, thanks for taking the time to talk to me and everyone else, and we'll do another update sooner than we have this time.
Yeah, thanks for having me.